Assalamualaikum warahmatullahi wabarakatuh. Hello, we are from Group 6 and we will present the customer profitability analysis. Let me first introduce the group members. The first one is Azra Aqilah. The second one is Nur Anis Izzati. The third one is Nur Azira, which is me. Next is Nur Izzatul Batrisyia. And then Nurul Aliah. And the last one is Nur Mashitah. For that, let's take a look at profitable customers. Philip Kotler, the father of modern marketing, defines profitable customer as a person, household, or company that over time yields a revenue stream that exceeds by an acceptable amount the company's cost stream of attracting, selling, and servicing that customer. Now, let's look at the definition of customer profitability analysis, or CPA. So the definition of CPA is the management accounting method that allows an organization or leader to determine the profitability of each customer or a group of customers by attributing the profit and the cost of each customer separately. CPA is necessary. It determines how profitable a particular customer is. It analyzes how much income each customer earns to how much the company invests in time, resources, or other costs to acquire or sustain that customer. Within all cases, CPA is initiated by segmenting the customer base and estimating the revenue and costs attributed with each segment. This is frequently used in conjunction with an activity-based costing strategy, ABC strategy. Profitable segments are maximized upon defining profitable and non-profitable segments, while non-profitable segments are reduced or eliminated. Now let's move on with the purposes of CPA. The purposes of CPA are: the first one, it assists in distinguishing between costing and money-making customers so that the company can monitor profitability performance and keep the initiative and business tools aligned. Usually, customers will seek into customer groups and based on service level or in segments on buying behavior or preference. The second one, it assists companies in focusing on the most profitable customer segment, which is entitled to be a loyal customer, by maximizing their wants and meeting their expectations. The reason is to identify the profitable customers so we can focus on retaining them, and then we identify the low profit customers so we can look at and how to fix this and identify the type of customer, because we should focus to maximize the profit. The third one is to create a pricing strategy for various products and customers based on their affordability levels so that they don't know which group of customers they can afford to pay a certain level of price. Generally, you will find the customer has a high cost to serve in low profit. Then the customer has lots to serve via better net margin, and they will increase as the revenues from the customers can increase depending on the customer's sensitivity to the prices. That's all from me. Now I will pass the presentation to Azra, explaining further on the advantages and disadvantages of CPA. Thank you.
Thank you to Azira. Hi, Assalamualaikum. My name is Azra Aqilah, and I will continue to explain about the advantages of customer profitability analysis. The first one is to improve profitability by eliminating unprofitable customers and maximizing sale or services to profitable customers. The second one is more understanding of customer segmentation, since accounting a non-production cost sometimes can be more significant than production costs when determining profitability. Third, improve strategic decision making by providing useful information for customer related decision, including pricing, discounting, and marketing decision. Fourth, the advantages of customer profitability analysis are to assist company to assess the value of a customer or customer category and to analyze how marketing and support services should be allocated to customers. And the last advantages are to increase efficiency across the company. The benefit of weeding out hard maintenance, low profit customers can be accomplished across the company. This saves department profit from concentrating its prosperity on direct customers who trust the pay for the goods and services of the company. Operation and finance should boost efficiency in serving only those customers who are trusting. Next, for the disadvantages of customer profitability analysis, the first one is the lack of data capture system that produce an accurate estimation of customer segmentation revenues and costs may not be owned by the companies. The second one is there will be practical difficulties in estimating the cost of each section. The introduction of activity-based costing is also a problem for many businesses due to its limitation, which are costs and benefits. Some argues that the cost of implementing and maintaining an activity-based costing system can exceed the benefit of improved accuracy. Next, customer profitability analysis can overlook the combination of customer purchase product or services. Profitability of customers depend on the combination of goods or services purchased. The danger is that the analysis will be used on specific underperforming product or services and will overlook the impact of sale of other products to the customer. And lastly, annual profitability may not be representative of the value of the lifetime. The cost of attracting and retaining the customer should be compared to the lifetime earning and not just the annual earning of the customer. That's all from me. Now I will pass the presentation to Izzatul.
Thank you, Azra. Assalamualaikum. My name is Izzatul and I will continue the presentation with the steps to implement customer profitability analysis. Without further ado, let's get into it. Step is the customer segmentation. The basis for customer segmentation will vary between firms and sectors. There are two basic approaches to the customer segmentation. The first one is demographic segmentation. Demographic segmentation is a market segmentation technique where an organization's target market is segmented based on demographic variables such as age, gender, demographic area, and income level. It helps organizations understand who their customers are so that their needs can be addressed more effectively. The second one is psychographic segmentation. Psychographic segmentation is the research methodology used for studying consumers and dividing them into groups using psychological characteristics, including customer values, customer interests, and attitude. Second step is the revenue attributable to each segment. Once the segment has been determined, annual revenue will be calculated per segment. This can be done depends on the company's products or services. To identify the exact amount of revenue earned by the customer and the aggregate amount from the customer segment, thus, adjustment to the price paid by the customer for a product or service must be included. For example, discount, service fee, and product enhancements costs. Costing ABC to determine the cost attributable to each segment. The annual cost is determined by segment. This cost will include both directly related product or service expenses as well as customer costs such as overhead allocation, marketing, sales, and distribution costs. Since ABC examines individual cost drivers to determine the profitability of a product, CPA also applies the same approach to customers. Therefore, ABC is an efficient method for allocating both types of costs to customers. The fourth step is to analyze the profitable and less or unprofitable customer segments. The profitable customer segment is those customers whose annual revenues exceed their annual costs. Since customer segment's profitability is likely to change from year to year, a more realistic analysis might involve calculating profitability over the lifetime of each customer segment. The fifth step is to develop strategies to maximize profits or reduce non-profitable customers. This stage comprises extensive planning to develop strategies that boost revenue, foster long relationships, and improve customer retention and loyalty programs. This strategy might include elimination and re-engineering to handle profitable and non-profitable customers. The last step is to review the impact of new strategies on the performance of customer segments. Any new strategies such as changes in pricing, cost reduction, or customer service should be evaluated after a reasonable amount of time to determine the impact on the customer profitability. Now I will discuss about the challenges in CPA. Firstly, management must develop reliable customer revenue and customer cost figures. Most often, the reason for unreliable information is due to inadequate information systems. CPA requires a system to accumulate the information across all business functions and geographic areas. Secondly, management must incorporate a multi-period horizon into the analysis. Customers that are unprofitable during one period may turn out to be profitable in the long run. If management only focus their attention on current period reports, they may decide to drop the customer who in the long run would be profitable. Thirdly, management must recognize and estimate future downstream costs of customers. Two areas that are especially challenging are environmental and litigation costs. Simply assuming that future liability costs will be zero can lead to substantial overstatement of customers' profit. Lastly, management must overcome to analyze customer profitability is to recognize different drivers of customers' costs. Original customer profitability reports assume that all costs are viable in the long run and none of the costs are joined. However, relaxing these assumptions may lead management to more accurate reports. CPA emphasized the importance of attracting and retaining profitable customers. This is still a relatively new area of management accounting and much research still needs to be done. However, the underlying principles is simple. Each dollar of revenues does not contribute equally to net income. Therefore, management should analyze their customer base and determine which customer to serve last. That's all from me. Now I will pass the presentation to Anis. Thank you.
Thank you, Izzatul. My name is Nurul Izzati, and I will continue the presentation by explaining about customer cost analysis and its purpose. Customer cost analysis is an analysis of the cost of product purchased by the customer as well as the cost of any other customer-driven activities from any part of the value chain. The cost of product purchased by the customer are assigned to customer along with the cost of any other customer-driven activities. In customer profitability analysis, the cost of all the activities used to support a customer or a customer group are accumulated and compared with the revenue generated by that customer or customer group. The relative profitability of particular customer or group of customer can be determined and used for a range of strategic decisions. Next, level of customer-driven costs. There are three levels of customer-driven costs, which is order level, customer level, and market level. Order level is the activities are triggered each time an order is placed by a customer and are driven directly by the selling and delivery of individual customer order. For example, processing a customer order, raising an invoice, packing the order, delivering the goods, and collecting amount owed. Customer level is the activities are related to acquiring new customer or maintaining each customer or customer group. Negotiating with a new customer may trigger activities such as credit evaluation and making the initial customer contact. Maintaining an existing customer can involve ongoing sales calls, technical support, complaint handling, provision of samples and catalogs, and cash collection. Lastly, market level is the activities that are related to a particular market or class of customer. These activities are performed to define and analyze customer needs, develop the new technologies to satisfy customer needs, maintain a presence in particular market, and attract new customer. For example, advertising, market research, and trade shows. Next, costs incurred in implementing CPA. Marketing resources comprises of selling department, technical support department, customer support department, customer service department, and sales support department. First, selling department. There are many costs incurred in selling department, which are account executive salaries and benefits, account executive commission, presentation materials such as a brochure, demonstration facilities expenses, travel expenses, entertainment expenses, and sales manager's salary and benefits. The activities in the selling departments are maintaining current customer relations, generating new customers, making customer presentation to prepare a request for proposal, and attending a new product training seminar. Second, technical support department. It is referred to a range of service by which enterprises assist users of technology products such as mobile phone, televisions, computers, software product, or mechanical goods. In this department, costs incurred in implementing CPA is technical design specialist salaries and benefit, LD telephone expenses, travel expenses, computer costs including software, sales support or occupancy cost allocation, and technical support managers' salaries and benefit. The technical support function are to determine the customer hardware and software needs and researching new product. Next, customer support department. Customer support department is a range of customer service to assist customer in making cost-effective and correct use of a product. It includes assistance in planning, installation, training, troubleshooting, maintenance, upgrading, and disposal of a product. In this department, costs incurred in implementing CPA are customer support representative salaries and benefit, automobile expenses, travel expenses, LD telephone, sales support or occupancy cost allocation, and customer managers' salary and benefit. In addition, training material are also costs incurred in implementing CPA. It is related to development costs and duplication costs. Lastly, sales support department. It refers to a variety of functions that help the sales representative focus on selling and closing deals. This function differs per company, industry, and sales team. There are many costs incurred in sales support department, which are clerical staff salaries, including benefit, and occupancy costs, which comprises of a list. That's all from me. I'll pass the presentation to the next presenter, Mashitah.
Thank you, Anis. Assalamualaikum. My name Nurul Mashitah Binti Zaid. Now, I will explain how activity-based costing can improve the understanding of customer profitability analysis. For definition, activity-based costing system is a powerful aid to management evaluation and decision-making, thereby improving organizational performance. Thus, will help company in improving their CPA analysis. In the late 1980s, by Kaplan and Burns, activity-based costing defined as the modern alternative to absorption costing, allowing manager to better understand product and customer need profitability. This provides the business with better information to make value-based and therefore more effective decisions. Next, there are 3 points on how activity-based costing can improve the understanding of customer profitability analysis, which are doing process that focus on assigning cost and revenue to segment of the customer base, allow companies to calculate and understand profitability at the individual customer and through additional overhead costs, and help determine which customer are actually earning a reasonable profit. First, activity-based costing can improve understanding of customer profitability analysis by doing process that focus on assigning cost and revenue to segment of the customer base, instead of assigning revenue and cost to the actual product or the unit or department that compose the corporate structure of the producer. It is also looked from allocation of cost to each type of customer. This will help to identify which customer type that give profitable for the supplier or producer. Activity-based costing method is by identifying accurate overhead cost and cost driver to which is more need for successful performance of that company. When using activity-based costing, there is process that need to allocate more resource to profitable activities and eliminate activities or reduce costs that are costly and wasteful. Next, CPE allow companies to calculate and understand profitability at the individual customer and product level and to analyze underlying revenue and cost driver. It will also help you to understand which customer and which product are most profitable and therefore critical to your company. There is important role in activity-based costing because activity-based costing gives meaningful information about the driver of cost, the relationship between cost and product, customer, market, and segment. Other than that, the activities performed in company must be carefully looked through. Furthermore, to provide more detailed and better cost and profitability information, and activity-based costing analysis enable manager to evaluate process from an activity viewpoint, leading to identification of non-value adding activities and process inefficiencies, also if there is cost that need to be reduced. Lastly, an activity-based costing system can sort through these additional overhead costs and help determine which customers are actually earning a reasonable profit. This analysis may result in some unprofitable customer being turned away or more emphasis being placed on those customers who are earning. In addition, activity-based costing mostly used in the manufacturing industry since it enhances the reliability of cost data, hence producing nearly true cost and better classifying the cost incurred by the company during its production process, and will make the company to earn largest profit. Next, to further discussion of the topic of customer profitability analysis, we have chosen Saudi Telecom because Saudi Telecom has adopted CPA program to understand the contribution each customer makes in order to enhance operation and treatment of its truly most valued customer. This program helps Saudi Telecom to make decisions to increase customer value consistently and proactively decrease the number of unprofitable customers. The aim of the program is to significantly reduce the cost per customer while increasing profit with smart planning. As per discussed earlier on the technique of CPA, Saudi Telecom has utilized the CPA technique. Telecom optimized cost element and brought unprofitable customer to a break-even point. For example, it expects increased profit by approximately 19%. Afterward, the customer value management team has been in charge of integrating the data. Once customer level profitability was calculated and validated, customers were categorized into value-based segment with the value calculation and segment in place. Saudi Telecom has begun to identify areas of opportunities and use case to derive value from the project. The team is implementing a number of initiatives related to customer service, product pricing strategy, customer retention, and loyalty activities. So next, let me explain briefly on the 3 insights created from the program, which are the customer service, product pricing, and retention and loyalty. Firstly, for customer service, by adopting the program approach, Saudi Telecom can identify exactly which customers are providing value to the firm and prioritize them for treatment at high cost. And then, in the context of product and pricing, Saudi Telecom can have an understanding of the customer level profitability that enable a wide bid rate that can be used to optimize price of product and service. Lastly, from the program, Saudi Telecom can identify the insight of the retention and loyalty of customer by adopting high-profit customer soft benefits such as priority treatment, and even invitation can build deeper bond with the customer to retain them. So all these insights will be used to optimize its customer portfolio and reduce costs. Overall, the application of CPA in Saudi Telecom has staged as the CPA can create visibility in the customer level for profitability and therefore provide the best opportunity to make decisions about how to treat different customers differently to achieve the company objective. That's all from me. Thank you. Now, I will pass the presentation to the next presenter, Aliah.
Assalamualaikum. My name is Nurul and I'll be presenting the reasons behind the increased concern of CPA as well as the conclusion of our presentation. Firstly, CPA is crucial for continued business success as it provides corporate management with the understanding of each customer profitability. It helps identify which customers are costing the organization money rather than making them money. The organization may find that a customer group that they thought were the most important is actually of a lower value to the company than others. These findings can help shape and shift the company's business strategy to keep its initiatives and goals aligned. Besides, grouping this information into customer profitability segments allow the company to take different targeted action and strategies. For example, a company can differentiate the customer service activities depending on the customer profile. Highly profitable customers could receive more attention from the company to ensure high level satisfaction, loyalty, and continued business relations. Another reason behind the increased concern for customer profitability is global competition between companies. Companies worldwide are being pressured to become more customer-focused and to increase shareholders' value. CPA is a useful tool in both areas. Many companies are convinced that improving corporate profitability requires more customer contact and closer customer relationships. Lastly, customer profitability can arise in either differences in revenues or differences in costs. In other words, customer profitability depends not only on the revenue resulting from sold units of a product or service, but also on the back-end services provided, including marketing, distribution, and customer service. In conclusion, when viewed as a whole, the CPA is used by companies to measure the contributions and value added by customers and customer groups. Setting up accounting systems with this philosophy is important for the accuracy of the analysis, and the contribution of this analysis will make to decision-making processes. At the same time, this technique allows the company to have an insight into the profitability per activity apart from cumulative profitability indexes. That's all. Thank you for listening to our presentation. Assalamualaikum warahmatullahi wabarakatuh.